We are going through one of the biggest consolidation periods in our recent memory. Tesla is down 25%, Amazon is down 13%, Google is down almost 16%, but Microsoft only 5%. And the weird part is, I actually made a video about this. Not a lot of hedge funds are selling this stock. The only people that are actually selling the stock are retail investors. Actually, the opposite is happening with Microsoft. Hedge funds are actually buying it and insiders are also buying it. So today we're going to do a stock evaluation, see what its price could be by 2030 and see if we can derive something from this. Why is big money so hell bent on holding this stock? First, we're going to go ahead and get over to commoninvestor.net and type in Microsoft. And then we're going to look up revenue numbers, number of outstanding shares, current PE, profit margin, and the current stock price. All right, all these numbers are now entered in. Now we need to make a hypothesis and a analysis on what these numbers could be in the future. And that will calculate the stock price of Microsoft in 2030. So first, let's get started with revenue. Now, when I take a look at Microsoft's revenue, it had a huge change in business model. It went from being a one price model where it would just sell you one license and you owned it for life to a subscription-based service. So that's why you see Microsoft go from 134 billion to all the way to 261 billion dollars. So it 2x by a model change. So is that repeatable? I don't think they can 2x over the next 5 years, but their cloud business is very strong and it continues to grow at a very rapid pace of above 30%. Knowing that fact, I think it can hit probably 400 billion or so. That's my estimate, but let's ask ChatGPT and see what it thinks. So ChatGPT mirrors the same sentiment. It's saying 118 billion over the next 5 years. Most analysts think that Microsoft will hit 285 billion by 2026, and it's never actually missed analyst expectations by a large margin. I think the most they ever missed was like 1%. So this number is pretty much a guaranteed. So let's see what Gemini thinks. Gemini thinks 452 billion, which is reasonable. If their cloud business continues to accelerate this way, I can see them hit 450. It's a bit on the bullish side for me, but I can see this being a estimate that can come true. And DeepSeek kind of mirrored the same sentiment with 444 billion. Again, I can see this being true depending on the growth of the cloud business. So I can definitely see this coming a reality. And DeepSeek thinks 488 billion. I think that's way too far-fetched. Something really extraordinary needs to happen for them to hit that number. Like the cloud business needs to start growing above 40% or another product or service really takes off for Microsoft. So I think the cloud one is a bit too bullish. I'm going to ignore that one. I'm going to go with something between these two from where I think and what they think. So I'm going to say 425 billion is a reasonable number that they can hit by year 2030. Now, this is estimating based on trends and historical market dominance. So this could be right or wrong, but at least we have an estimate of where this companies going in terms of revenue. We're going to go back to commoninvestor.net and we're going to say absolute number instead of percentage. If we thought of like it can 2x or it can have 150, 250, then we would click percentage for revenue growth. But we have an absolute number. So we're going to write 425 billion for revenue growth over the next 5 years. So number of outstanding shares. This is an interesting one. It was on an aggressive route to decrease the number of outstanding shares, almost buying back 1% of the company every year. But in the latest 3 quarters, it's pretty much flat. The amount of buybacks it does equal out to the dilution it does the following quarter. I have a thesis why they're doing this. I think it's because of their insane spending on AI related products and services. Once that ends, I think they'll go back to buying 0.5 to 1% of the company. So I'm going to give my own estimate and say that it's going to buy back 2% of the company over the next 5 years. So for number of outstanding shares, we're going to say it's going to decrease, not increase, by 2% over the next 5 years. With PE, when you look at the trend for its PE, it usually gets in the high 30s or even mid 30s during a bull run when it's doing really well, it's hitting revenue numbers and the sentiment on the market's really well. But when the sentiment starts to go down, it starts getting really close to the 25 mark. It even goes below the 25 mark over the last 5 years, but it gets really close. I'm going to say it's going to be in this between state over the next 5 years and say it's going to have a PE of 28. I think that's very reasonable for a company of this size. So 28 PE is very reasonable. We can't expect a 30 PE. For that, you need like insane revenue growth of like almost 3-4x. And I really don't see it doing that over the next 5 years. Maybe over the next 10 years, but 5 is a bit tough. For projected profit margin, its current profit margin is 35%. Usually software companies have an above 30% profit margin. I don't see why it can maintain a 30. I really don't. As time goes on, products, services, and hardware built out, it's done. Then you're just doing maintenance, keep up to keep the hardware running and stay to update with current market trends. Unless something big happens like an AI boom or another quantum boom, unless that happens, I don't see their margin decreasing where they would need to spend all that capital again. So with profit margin, I'm going to say 32 is pretty reasonable for them. With all of these numbers hypothesized, now we're going to hit the calculate button and see what its stock price will be by 2030. So if you were to buy the Microsoft stock at today's valuation, you would be underperforming the S&P 500 by almost 16%. You would need to buy this stock $515 for you to just beat the S&P 500's return. And if you wanted to 2x your money, meaning you really want to beat the S&P 500, like we all strive to for taking such a massive risk with the individual stock, you would need to buy this Microsoft stock at $260. I don't know what the analysts see in this stock. I don't know why they're piling up. Maybe they have something up their sleeve that we don't know. To me, based off the data, this does not look like a good investment at all. I know their Azure cloud is next level. I know that their foothold on the enterprise it's unmatchable, but we are giving this company an insane premium. At the end of the day, is it really worth the risk? In my opinion, it really isn't. But I'm still gonna add a very small position just to see what happens with this stock. Like I'm talking about, if it goes up, it has a positive impact, but if it goes down, its impact on my overall portfolio is so minuscule that overall it's not even gonna matter in 5 years. So I'm gonna add a very small position. I don't think anyone should add a very meaningful large position in this particular company, in my opinion. Anyways, guys, I hope you like this analysis. I hope you found this website useful. We're still in the development phase of building out commoninvestor.org. I'm not sure what the name will be at the end, but tell me, give me your feedback. Do you guys like it? Do you guys hate it? I think this is a better alternative than an Excel sheet. Whatever it is, let me know, comment below, and please hit that like and subscribe button.